right to it. A lot to talk about today. Happy October. What's going on? What's the word? Got to talk about Nasdaq. Got to talk about October. Get into the bigger developments. Obviously today being kind of the first day we've seen some action, real action in a while. It's been, I guess, like almost since that last up session back on the 19th. It's been somewhat muted until today, so let's get to it. Great to see everybody. What's going on? Welcome back. Hope you had a great weekend, and let's just get ready for this October. Everything that's about to happen. I mean, today's news, whatever that news was, again, avoid narrative, please. Let's get off the news, get off the just all of the trigger points that are being blasted full time 24/7. Let's focus on signals. And signals we have today, something that shaped up on Thursday, were some overbought signals on Nasdaq on the daily. Let's set us right up for October. So great to see everybody. What's up, Victoria, Pinchy, Masterson, Squirrely, Rogelio, Frashogar, Shredded Lattice, Alec, Louisiana. Do you live in Louisiana? Welcome. Did you get hit? That hurricane, that last hurricane that blew through, man, that was something else. We've been really lucky down here in South Florida this year. And the Gulf Coast, not so much. So shout out to all those people affected by the recent storms and hope you guys get through it. It's a part of what we have to deal with living here. What's up, Neil? How low can we go? Let's talk about that. Let's talk about that, Neil. Let's talk about that. Let's talk about crypto, the big signals, the pullback. Because you want a pullback. You want retracements, everyone. Embrace the suck. Seriously. You want this thing to pull back now. You want this gift to be presented to you. And so let's respond off of the short-term signals and go from there. Because listen, this HSI retest on Nasdaq on the daily, you're going back to August, is why you have a yellow dot, not because of that one. So let's take a look at that. What does it mean in terms of major retracement? What started in August? And then where's the opportunity? Some of the things I've really been hammering home in recent months, in fact, are developments like what is getting triggered today with some 50 level readings. We have a yellow dot today. That will definitely be triggered. You're down 340 something, although it's all over the place, man. This thing is, Nasdaq has been up and down. It was up and down 100 points in the intro. Did you guys see this? I started the intro and I was looking to hit this counter signal. But check that out. I mean, it's just the last couple of minutes. 1954 down to 890 and then back up 100 points in about 5 minutes. So welcome volatility. Come on back. Here's the thing. I was talking to my folks. I just posted this little counter signal. That should send it back down. That's the 5 minute for today. Beautiful red, the dot here. And this is actually something where I'm going to be rolling this out really soon. These lines, those are the price level lines for confirmation, HSI dot confirmation. So we're squeezed between there, which is like 955 to 895. 895 is a big number for today. Although we fell well below it. You're dealing with right now this big crab pattern. But nothing for today yet until we can get another oversold dot. HSI is trending back down. I expect us probably come back, retest some lows here. Okay, retest make a run to retest like as low as 19.8. This little rebound this morning, nothing big. You go to the 4-hour chart, you've got stuff like yellow dot failure. Oh, no, that's not right because that's extended. We want RTH, regular trading hours. So we had a 4-hour pattern and we have some obvious gap levels. Just come on back, retesting the late September second half rally. So, not too much really in terms of major development yet, but be aware of that. Also, folks, before I go any further, a slew of new people came in. I don't know where'd you guys come from? Welcome though. I mean, literally in the last week, there's been a surge of new people. So welcome, and just let me get this out of the way for everybody that's brand new and a lot of international folks. Get the software we're working with, Harmonic Pattern Collection for TradingView. Get your 14-day free trial to any of them, but send your TradingView username to hpc@sr-analyst.com. Also, I'll share for everybody that's a new trial. I'll share my some updates with some of the new things that we're going to be rolling out on our Discord. I got a whole bunch of new stuff because I think what's going on above and beyond the immediate 30-day outlook here, get past this election, is going to be a hyper market environment. If it's crypto, stocks, futures, what have you, okay, I'm expecting things to get wild, volatility wise, price action movement. We've been fairly, despite the with the exception of this August decline, we've been in just a steady uptrend since November, and most of that tailed off. I would even say really by May, final push up here in July, and range bound since. But we want to be looking opportunities, thinking opportunities. The bigger picture that going on right now, and I think the futures chart here with this butterfly really highlights for Nasdaq, tech stocks, like where's the next level to be jumping in on. Right now, we're just banging this resistance. Okay, that resistance up around 20,100 at the moment, just getting rejected again. The fact that we had this reaction early in the summer, then we have this kind of a thing where we faced, and we're still dealing with this, a new continuation yellow dot. Okay, and that retest point is like 19,742. That's probably where we're going on this pullback for now. After really today kicks it off, but I wouldn't be surprised to see us there, pretty soon. Maybe this week. Maybe that's an early October target. Anyone afraid of October? I don't think so. I think whatever develops from October into November certainly, okay, should be looked at as temporary pullback. The obvious objectives here come on back to like 19.7. Yeah, 19.7. That works for me. Just retest that weekly signal, that weekly bar, even if we were as low as 19.5, and then trigger something in a couple of weeks. Check this out. What's going on the 50 level? Because this is a big deal too. We want to see, is that going to push up above the 50 on HSI? These are important metrics. Amplified reading. What's that doing? Is it pushing up? That needs to push up. Or are we just still in this consolidation phase? As long as we stay above that 50 level, okay. not a biggie. And again, this could be an extended 30-week consolidation range as we resolve the election. I don't think anyone's going big long until we see the results of what happens in November, the US elections. We also know that we're hitting big numbers. We've hit big numbers. These big numbers like Qs, QQQ 1618 at 505, that's what it is. So if we go into, say, 30-week sideways range, or not even that long, but we can lay out and say until first week of February, there it is, the end of January, we're probably going to be dealing with this range for a little while. 505 on the top side, where we could make a run after we resolve the next couple of weeks. The ideal scenario here is to come back, retest this weekly candle at 473. That's right there. That's what today looks like we're starting. And I don't even think it's that much to be concerned with. Just know that, okay, October gives everybody a reason to sell. Get a little scared and then, set it up. Could we have something larger? Of course. But I'm looking for that next oversold signal trigger as a substantial opportunity once we get past all the shenanigans that we've been dealing with. Even if, look, this HSI that we've dealt with recently, even if we come lower than, say, this 475, 473, and just retest September's lows or an 886, it just seems like a lot more than it really is. So just don't be surprised if we come into a minimum 618 retracement on the month. That's nothing. Have we done that before? Of course. Just look what happened in August. A nice move up. Has that intermediate high and then right back down. Look, 618 was just shy of there. Almost a perfect 618. So doing these kind of moves is just typical market action. I just think, and I know that the narrative on pushing people's buttons has never been greater. So be aware of that. That's why I want to stick with signals. We triggered a few today. Good. Bring it in. Bring it back down so we can take advantage of what is to come. Yeah, okay, I know the news event of the day, Iran attacking Israel. That's narrative, okay? Last time they did that, not a single missile really got through. And again, guys, they are blasting the stuff for our distraction. Look over here, don't look over here. Get worried about things because, something might happen. And I still come back to the fact that the bottom line is that the crazy liquidity that these maniacs have authorized in the last 4 or 5 years continues to build its way into these markets, where this is not going to stop. We're going to continue to see and hope to see 10% corrections as major opportunities. I meant to mention that. I meant to really get into that a while back of NDX, Nasdaq. Because this market does remind me a lot of what happened in the 90s. From 1995 to 2000, it was just insanity. Let me go to the monthly so I can get there by tonight. There we go. Okay, the 90s did just a number of strong 10% pullbacks on its way as it built to the crazy, did a 10x move off the low. There's 1995, folks. Okay, it was like 382 on the Nasdaq 100. You went to 4,500. The composite was 5,000. All right, and you had so many bumps along the way. okay, that every time there was a pullback, people were afraid, and they still had a hangover from the 87 crash, which was a nothing burger. It was like 87 crash is like 2020, like the COVID deal. So, and I'm looking at things like that. I'm thinking that, I mentioned before about everyone being quite concerned with Fed cutting rates and the inversion. And last time we saw that was 2007, but it took months. And every step along the way, a pullback, a strong pullback, was eventually corrected and resumed. So let's just keep it kind of together here. Let's try to avoid that narrative. Let's stick with what the major signals readings are telling us, the long-term uptrend, and our regression channel. Good old regression channel. If I can find that. Where'd you go? Hold on. I can't see. There it is. This is the only thing I care about. Okay, that's it. That's the format, and maybe we do it even better on a weekly. Okay, that continues. You break the channel, okay, but we have yet another HSI continuation high level that is just going to ride this support for quite some time. I mean, you got to go back a ways until we saw serious breakdowns. 2022 was the last time we had a major retracement, and 2022 was probably was a greater magnitude in time and price, and ended up being probably the biggest opportunity of this decade, and will continue to do so. Now we're flashing other signals here, so we're not going straight up, and just come on back, retest this, do the work as necessary. The only thing that I really care about is getting demonstrative signals to get above the 50. That's where acceleration really begins. Amplified as well. So we'll take more time. In the meantime, for Nasdaq, that's the index, the composite. Retest that bar. Retest the open of that bar. Around 19.4. The futures are around 19.75. Like this. Okay. Is stuck in this consolidation zone. Kind of looks like Bitcoin, right? It has a pattern. It did a stealth reaction pretty quickly. It got oversold real quickly and formed a dot and is trying to push back into the zone. It's very similar to Bitcoin, where I'm looking for this eventual hop retest 21,129, which ended up being the last inflection point. So we need to not get overly focused in kind of a fear, greed mentality. Stick with what's in front of us, and go on it. I mean, what's this 5 minute to the the 5 minute right now for today? Where is it? Where's my crab pattern? Hold on. I'm looking for this to stabilize. Yeah, now we just got thrown down. Yeah, down at this crab, like 895's been the number all day. Looks like it's just going to be a sloppy retest. We did that. We already came all the way back down to 1860. We made a shot at the lows. I'm looking in here. Some kind of bounce today. Get back to target 1 at 2113. So, at least we've got some good action. They crushed it right on the open. I mean, there was our open, and they just sent it down. So I guess news desks already had that news in front of them saying let's hit the sell button. Just not a biggie for me. S&P 500, same kind of a thing, but Every time they sell that off, 50 or 75, sets up a larger opportunity. Let me get RTH, regular trading hours here. Okay, squeezed at, we're 5,800 last week, Friday, above 5,800. Remember, this is the deal with S&P 500. Oh, let's go to the SPY because that's the better pattern. That's the monster, and still remains to be I think the pattern to be focused on for the markets going forward. You're checking back right now, weekly or monthly even, probably better. And okay, monthly looks like this. Now today's the first day of the month. Are we going to put in a dot with a bearish candle? I got to check that out. Why is that dot showing up? Oh, I know why that dot's showing up. This is important to review as well. So the monthly, we know that's a beautiful pattern. Should we expect a major reaction off of it? Not yet. Do I expect the 561 to 618 level to cap what started in 2022? Eventually, yeah, after we put in a few more bars. This dot, though, is related to that first signal all the way back a year ago. Check back, one red candle. Okay, that's a second candle. We do have a second signal here, so we technically would need two, maybe three red candles before that would really be an issue. Confirmation. Confirming the big pattern, and it's a beautiful crab pattern, but we're still looking for that to push above the 561 level and then put in confirmation somewhere between 561 and 618 over the next 3 months. Sure. So, all of this kind of bumpiness is to be expected, but the monthly close, this one, the next one, that's going to be absolutely essential to how we look at next year. And that's for now. Okay, that presents us with a phenomenal framework going forward and going into next year. If we were to get, let's say we stagnate, because we can break down, look, check out our indicators. Probably the most important monthly signal you want to see here with these this is a big pattern for October. Can we get that inflection to come out? Knowing acceleration is not until under 50. Okay, and then we have HSI. HSI still up. One signal, is that a first dot? Maybe, but I wouldn't even be concerned about it until we got to the 50 level. What's that mean to me and you? It needs more work. Before you can jump off a cliff, jump out of a skyscraper if you want, you need a couple of red candles. You need HSI. You need this inflection and amplified. Within a long-term trend, if that was to turn into something, let's say, I'm going to have to, I don't want to get into it today, but I have thought at length about having a frank discussion with everyone here about the election and the possibilities of the current U.S. election. And I will be playing it. I will be playing it with two distinct strategies after the result. If we go one way, I think you guys know what I'm referring to. I will definitely be looking for kind of balls to the wall equity price acceleration. If we go another way, okay, then I'll be looking at other vehicles, more defensive, more gold style markets, Bitcoin style investment strategies, security strategies. And that will include top name stocks, but defensive stocks, dividend stocks, things like that. We'll talk about that. I'm going to put something together that's hopefully apolitical or perceived to be apolitical, but just a frank discussion of how we should be looking at this going forward. This is a first step here with the crab, but as we know, there's a process to how that has to unfold. So let's just keep an eye on it. Also, even if we were concerned about like a breakdown, it's October. Oh no, the market's gone down prior Octobers. Maybe, sure, not every October, but yeah, you've had market crashes. I remember the 87 crash. I remember where I was. That seemed like crazy, but that was the end all be all buy opportunity of my lifetime for sure. Although I was in college at the moment, or at that time. But with this pattern, regardless, okay, a whole lot has to happen on the SPY before I'm thinking larger retracement possibilities. And even if it did, just so you guys we know, it's a type 1. It's a target 1, 482. That would be a gift. I mean that. So what's the worst that would happen? Like, let's say this thing flatlines right where it is, 570, 565. We have the check back. We have a lot of things on the weekly as well that we can look at. And let's say this thing starts to roll over tomorrow. There's the weekly. Okay, because look, we're checking back. We're checking back off of that last HSI. The August reaction gave you a beautiful counter signal. That sent it back into the zone. That's something I've been talking about. Okay. Now, we're just really, you still need 2 weeks because we retested the initial signal 2 weeks ago. So I need 2 red bars before I'm really even concerned, and maybe the weekly gives us a better insight, amplified. Okay, with today's action trying to roll over. But today's one day here. Okay, we got the rest of the week to get into. Also, a 3-bar range is all the way down here, 540. So I'm again, any major concern, how low will this go, to answer Neil's question 10 minutes later, is simply you're going to need another week or more before you can make the larger assessment. Break it down. Listen, the 4-hour, last week, the 4-hour looked like this with a dot HSI temporarily oversold. And I don't think it's much different than what we have going back to the end of August. The new feature that I'll be adding, again, that's a great, I think it's a simplified, I want to build more into it in terms of like automated stop loss and target off of that signal. But even understanding that, okay, this is a green line. What does that mean? That's the last clear HSI confirmation line. Okay, the red line that triggered last week, that's bearish resistance. That provides a really solid range going forward. And so I think that we'll have that this week for everybody that already has the software, new trials, new owners. You guys will get that. There's a lot more that I want to do with this because there's a lot of information, really great kind of understanding of how far any market move can go. Just look at the last few. That was August's dot. Bumped up against that, then rolled over. And then the other part of it, the last one here, was on the bullish side. Okay, you go back to late July, early August. You were thrown down, but the key is when we break the 50 line, it doesn't happen all at the same point. That's something I do want to tweak with it, but currently, the last overbought signal there, we did hit the 50 at that time. Now, on the 4-hour, we're now cracking amplified on the 50. So yes, we could see some follow through to the downside on this 4-hour chart playing it dot to dot. That means the next day or so, probably head lower, probably break it down with some follow through to the obvious targets. Welcome to October. Carthago, I completely agree with that comment, and he says it doesn't matter, to be honest. Monetary expansion is not going to stop, and it's not going to stop. So if we know that we have this underlying current, okay, that our job then is to pick out overbought, oversold conditions, waiting for those oversold conditions to come to us, buying on uptrends. Okay, buying oversold signals, oversold patterns. And, do you short bearish patterns? Maybe. But again, I think you're only going to get reactions. Like we had this bat pattern on an hourly. You go back to August, and all it did was a type 1 reaction. That was it. And that doesn't surprise me. That's probably what we will continue to see, election or no election. So maybe we're back into a short-term reaction here. You've got a lot of things that weren't there last week that are happening now, like these 50 violations. For me, this top indicator, this is Harmonic Strength Index, folks. Both of them are the proprietary signals that I've developed, serve me quite well. That, look, I can read this. I understand what that means. We're broke. We got oversold. There's the dot confirmation. Now we're breaking clearly on this 4-hour bar. That means something. This individual bearish candle, almost perfect and bearish engulfing, but that means that breakdown is kind of triggers some follow through. And I mean bigger follow through than just this one bar. You look at obvious levels, gap fill 564. That could happen today. We'll get into more of this. Before I jump to crypto, I do want to look at gold, which tells us it's just remarkable. Gold is 2,700. I said last week my targets on gold are now more like 3,000, 3,200 on the top side. And the fact that we're, flirting with 2,700 already, beautiful deep crab on the 4-hour, and then look what it does. Big middle finger to that pattern with a bullish counter HSI signal. And that's critical too, because you could draw patterns all day long. If you don't have an understanding of what the overbought, oversold bias is, you can easily just get bypassed. I mean, you're trying to fight one of the strongest trends in gold in decades, and all you have is a pause here. Okay, you have confirmation. It goes to the hop, goes sideways for about 5-6 4-hour candles, and now with today's action, it's pushing it up again. The big news, and I don't need to spend a lot of time on this, and I want to show you guys. Oh, where it just popped out. I had the crab pattern there. Probably on the weekly. I don't know why it did that. It's not a butterfly. It was that monthly crab pattern. Hold on. Why is that doing that to me? Hold on. I have to come back to this. There it is. It's there you go, the weekly crab pattern. If you guys see that disappear on your platform, hit refresh just like I did. Okay. Oh, that's SPY. Sorry. Gold. GC. Come on. Monthly. There it is. I don't know why that's disappearing, but I wanted to use that because it's phenomenal framework structure and we should watch this. The 1618 deep crab is there. 2650 or so. And then the 1902, that's the hop level. Okay, that puts us a bit higher. Puts us like 2,800 on this move. So keep an eye on that. There's nothing stopping that train until we can register some overbought signals. Look at what's happening. HSI on the monthly is expanding. So you are several months away. We're coming into the seasonally bullish November, December, January timeframe for gold, and I think gold will make a run by January up close to 3,000. The bigger numbers, you go to long-term, super long-term chart here, you have to go back to financial crisis peak, post-financial crisis, because it's more about this 15-year structure. And yes, that's relevant. You got that. You got your X, your A, your B point. We already talked about that last week. But just as a refresher, that 1618 is just shy of 3K. The 1902 puts you like 3,200. It's more like that. So gold at 2690 doesn't mean much to me at this point. It's more like that 1902 is 3,200. Don't be surprised to see that happen. And what it seems like is going on though, with this kind of increased action, if we get a big candle, breakout candle for October as well, then we're pretty much going to remain in this serial bar over bar move with gold. I don't think it's going to become obvious for the public until you get to 3,000. And then people will start talking gold 5,000. But this is big stuff. The other one that is one of the most beautiful charts I've seen is silver on the monthly. It's a massive bat pattern. Okay. Didn't ever almost came back perfectly. I think if it wasn't for that, the inflationary cycle peaking up, we would have had a perfect type 2, but that's still okay. Nothing registering. Gold, the SLV, which reflects the spot price, 34 an ounce. You're 28. Nothing stops it till you tag target 2. And I would even think that making a run all the way back to 40, which was amazing, 40's like this, where we connect some dots, X, A, B, C, D, gives you a bat pattern like that. That's just another way to use MW framework for targets as well as entries. You can go both ways, but what do you have here? You've got the B point breakout called the BAM, Bat Action Magnet Move. It's a breakout strategy where you get, you could paint it a few different ways and say, oh yeah, of course you got a initial low, inflection low, first thrust, higher low, and then yeah, of course you break out. But where? I mean, I see that a lot. People talking about that generally, but when we measure it within MW framework, you've got that kind of a thing where that's an accelerated move. All you need is a close, any kind of close above these initial highs that gets you really going in an accelerated fashion. Gold, I've been saying it all year. Probably really started saying this at the beginning of the year. Something is up. Something is up. This is unique action. And silver showing itself as well. Quickly, crude oil. What's going on there? Got another look at another commodity sector. What was this? Okay, that's crude oil futures. You go back, the deep crab, but that's a monthly chart. Target 1 reached. Another confirmation around 60, and that's where we bounced recently. It's like this here. Okay, came back. Did we tag that? No. We didn't tag the bigger bat pattern. Where's the weekly chart? Sorry, that's really what I wanted. As much as it's been or seemingly has this latest throwdown move that a lot of people were concerned about, we're just still consolidating really in this 60 to 75, 60 to 80 general level. And I don't think that that's going to be affected. Not going to see that much of a change where this is a real floor going forward. Talk to me under 60, get some larger structural breakdown, but that's just the crude oil's hanging tough. And hopefully we will get it back down to 60 so we can refill the strategic reserve, which I think was sold at a cheap price, but save that for another conversation. I am looking at things like XLE. Okay, XLE has been banging against long-term monthly resistance for a while. There's the weekly crab. The monthly's even better. Monthly's like this on the XLE, hitting some just under 100, some larger patterns, okay, and not responding. In fact, this is an aggressive and I think quite a strong grind higher that, to me, you're going to run out of mojo pretty soon on this pattern, where eventually we hold, we keep moving up, that this is wanting higher prices. I know it's, you might say, well, why, Scott? It doesn't make sense. You got a T2. All right, this couple of patterns here, and this is more of like a general, hey, let's take note of all these patterns that are obviously we're forming according to the algorithms. Okay, and then this T2, well, that's just a starting point. And we've been in that since the T2, about 6 months, without much of a breakdown. And I come back to something, this is a new 3 ideas for my crew. I think I posted this recently, where Chevron, CVX, coming off this really nice butterfly. We're in this around 143. Okay, about to complete the type 1. The bigger point here is the fact you have kind of a dud long-term reaction, some back-to-back patterns. Now you go bullish, and that should send it back up. So my point here is that I don't think, despite all of this, these weekly, monthly patterns have had their opportunity in the last 2 years to really come in and do damage, and that's not what we're seeing. Seeing mostly range-bound price action that will eventually resolve itself for CVX and others. They look like they're setting up, getting ready to go. Check out things like Valero. These are some great, fantastic long-term opportunities that I think anyone needs to have a little exposure to. And they're really, for the first time in a long time, the refiners, Valero, ConocoPhillips, triggering some weekly oversold levels. Here you go. ConocoPhillips, that's the other one. Weekly oversold down here. Yes, we banged up against some of that bat pattern that capped it at 130. Now around 105 is the larger support point. So these are just this kind of sideways grind. It's not an easy read, but the one thing that sticks out is the amount of time holding up there that kind of contains any larger bearish reaction. What's up, Greg? Yes, Greg is citing the port strike. I agree with that. We'll see how that goes, because, if you stop the ports, yeah, that will definitely have a major effect on the economy, or at least a good reason why the market might retrace on a story like that. Just like today's story. It's just a story. It's a narrative. It comes, it'll go. The market will have its short-term reaction and then size it up again. What's up, Rogelio? You want to look at Costco? Yeah, I think Costco is absolutely, that's another one. Costco is it is the type of stock the guys are talking about. Buying gold and silver at Costco. Interesting. Yeah, I mean, look, you can do that. You can buy some bars. I've got a couple of bars. Nothing crazy, but Costco does offer that. Costco has done this phenomenal move since really the 2022 low. Where's the next buy point for Costco? Can we get a retest of that shark? Because Costco is definitely one of those kind of long-term trending opportunities that you got to be patient with it, but every time it comes down there, it sets it up. It gives you, a monster trend continuation opportunity. Although I know you guys are talking about buying gold and silver bars, but that's the type of chart I want to be lining up. The refiners are like that. Costco's like that. There's other ones that are coming together that have my attention for sure. Some of the so today, what is down today? Things like the semiconductors. Again, I'm happy to see that happen. I am praying that the semiconductors come in, have some kind of major correction this month. Let's go to the SMH. Okay, because these are things long term. They've had phenomenal runs in the last 2 years. And so I want to see big corrections where it'll give me another opportunity to participate on the long term uptrend. I mean, come on back. I've had this discussion before where, 2022, man, that was it. That was the low of the decade, much like 2019. And you see the same situation happening. So SMH is looking like this. Maybe that's not even the neatest trend channel, but we have, despite the some of the aggressive selling in KLAC, ASML, Intel took a knock 2 months ago. I'm looking at stuff like that and HSI continuations. So if these come in this month, like let's say SMH drops 10%, be ready for it. SMH back at 210, 215, retesting some of these obvious continuation signals are going to be the things we're going to line up. Remember, I've posted this before, but we do have patterns here. There's KLAC on the daily, has a big pattern. Come on back in here. It's right there. Shark, 689. Maybe as low as 629. And I with this kind of action, that especially last week, we had a retest of that yellow dot. Let that come in. If we see a big drop, and I do think this is possible, you get some bad news. Maybe one of the big chip companies, maybe they may have some surprise bad news announcement, or government goes after SMCI even more so than they have. They target these companies like they have been. That split today, by the way. Our number was 384 pre-split, now 38.45. Okay, despite all of that news and all of that lawfare to go after a company like SMCI, it's a beautiful bat pattern on after a major 65-70% pullback. Guys, this is the kind of opportunity within this long-term uptrend we want to size up. I was here last time. I said 384. We had and that was on the day that it was a big down move. Okay, now we have a dot developing, and so let's size it up. Earnings are coming. What's that? The 29th. What needs to happen for this to really get turning around? Well, HSI has to obviously turn back up. Amplified, get these turning back up. So let this stuff come in a little bit more. Embrace it. Embrace what is happening and hope, measure, target these to come in further and then get ready. Because I think if we have October swoons and these drop in, they're going to be massive opportunities and they're not going to stay down there very long. Here's Broadcom, another one that again, longer term, the uptrend is firmly intact. Okay. Tried to make a breakout run. I was looking for this back at 129 to tag that a type 2. Never materialized. But just so you know, this trend channel is firmly intact. So to come back to say 150 might be that's all you get for this next move. Okay, I want to be clear about this. We're going to get through what started in August. We're still going through it. Some stocks managed to crack new highs. Others did not. We're still in the big 1618 reaction phase. But once we get through this, if it's a month, if it's 3 months, okay, that's the point where I'm looking for this to resume these channels. Look for larger confirmation. Okay, and if we run into issues, like let's just say we're up here with this Broadcom, and let's say, our ideal entry is 129, and then maybe it violates that and drops to 113. Even better. I want to be clear about that. Like I'm hoping that the market serves this up for all of us to take advantage of whatever October is going to deliver. Couple more big things. Really simple stuff. So last time we talked to these kind of big economy stocks, things like I mentioned Dow Chemical, which was just one of several of what I like to call these forever stocks, where you're looking for longer term points for entries, and we're looking for long term continuations. That's a perfect example of one of many that I discussed. There's others like, check out PPG. Okay, basing down here long term, right around 120, 125, and then where's I have a bat. Yeah, there's the bat pattern coming back down. What has held up and has been like a stealth market are these industrial stocks and the Dow Jones Industrial Average itself. Let's quickly go over there, and then I'll jump to Bitcoin. The diamonds up here around 42. Now we have to talk about the industrial average and the diamonds because we tagged the hop level for 2261. And today, first day we've seen any kind of larger reaction in this zone off of that crab, and that's on a daily. Here's the weekly. We do have patterns up here. 426, a big deep crab. The software is kicking out. Okay, yellow dot, not complete until the end of the week. Let's be aware of that. These are reasons why the market might come in after this week. And again, I'm not, it's not anything I'm overly concerned about, but don't be surprised if we see further retracement within this large zone, bearish zone. 426.55, that's your hop level. That's 42,000, basically 650 on the index so far. Last week's high, 426.20. I'd say pretty close. So don't be surprised. I had a couple questions, maybe a little confusion of like, is it a buy now? No, it's not a buy now. If anything, if we see this come in, we've got some signals, like I said, on the SPY. We have some daily and some weekly things that probably need a little bit more time. At least like the SPY on the daily, we did have a dot last week. Today's the really first day we're rolling over. And it could be something as simple as this kind of correction that we saw just back in August. Stealth, sharp, down, and then we'll get another HSI. Literally, this breakdown here, it is a big thing, but it's the first time we've seen it in about 6 weeks. Last time you go back to really the peak around early September, so about 4 or 5 weeks. Okay, but the other part of this is that we've really been scraping this 556, 560 for a while. To me, this is just a drawn out extended consolidation. It's the pattern. The longer this goes sideways or even has these stealth reactions and recoveries, will eventually lose its mojo. That's the point. Okay, there's a lot going on here. I mean, really, it's not like where we were, say, end of August, where things got super quiet. Now we have some serious developments that have my attention, and I think we're going to see a heck of a lot of volatility. You go back to the last 2 election cycles, we had major moves going into the elections, week before, week after, and then a lot of follow through. Right now, we're just bucking up against some clear resistance signals that, a few more days like today wouldn't surprise me. Couple more. Yes, David, thank you. The bad action magnet move, all of that style material is over on the website. Go to harmonictrader.com. Right there, register now to become a basic member, then log in. And again, all of that is right here. Get on the books. So there's the basic member page there. Okay, and then the books, volume 2. Check that out right there. All of that's free, available for free. Okay, go there, and then on volume 2. I do want to talk about, not today, maybe Thursday or maybe next week, I want to talk about longer term possibilities. I want to go deep dive and really get into some of the things I talked about, especially in this book. Okay, because I wrote this book. I put this book out. It was like 2007. And I literally wrote this. Harmonic projections, the year 2025. And I was always fascinated by what Bob Prechter did in his book. He did an updated edition of Elliott Wave Principle where he called for a massive bull market in the decade to come. And I did the same type of thing where really thinking about, what happened in 2007, 2008. I forget exactly when I released this, but yeah, this was written in 2007, looking for 36,000 and the year 2025. It's pretty amazing that we're here. So I want to kind of look at things in a separate session and just focus on what long-term possibilities are, and maybe even make a new 10-year, 20-year kind of projection of what's possible. I think the markets are not going to change. What we've been going through for the last 15 years, and no matter what happens, they're not going to change. Okay, so how high can they go? What kind of metrics can we project forward? It's either going to be Thursday or next Tuesday, and we'll just go super long-term numbers: gold, dollar, rates, all of that. And then, of course, Bitcoin. So let's get to Bitcoin, because Bitcoin, this is a Bitcoin cycle. And Bitcoin, we know that it triggered the big move, triggered the weekly, okay, got up to, we were saying 67 was the next stop, next objective. What do we get? 66.5. Okay. And we got the breakout above the 50. That's the first step. Was this first step, first move to do something like that. Also, Amplified was able to pop up, but then we're rolling back down. Okay, not what we want. We want that thing to continue. So we'll monitor it. But the levels, still levels don't change. 67, 70, then a run prior highs here, or even better, the hop level. Where is that on the shark? Where is my shark? Hold on. Shark. It was Binance. I thought it was Binance US feed. One second. There she is. Binance. Straight up Binance feed. Okay. On the Binance feed, yeah, this is all the sketching from last time. Still have the same situation. We're bucking up against that big shark pattern. It's not a type 2, meaning it's not the second time it's tested because we never hit the 5.0 level. It's more of this dud action where I don't expect this thing to blow off just yet. I mean, it's not absolute moon phase. It's begun this resumption back up into the zone. Okay, especially with the fact that we're 30 weeks, and that is pretty remarkable. Ever since the initial peak, going back, what was this, March? Yeah, the first week of March. So that 30-week window, guys, it ends this week. That 30-week window ends this week. So longer it stays above this level, above 60K, above 65 is even better, the more that this starts to lose its mojo. That's just the easiest way to think about it. So last week, a lot of excitement, a lot of hoopla to get back up to that larger range. What happened? Remember we had the crab pattern. Oh yeah. We talked about the crab pattern. And it pushed it higher into the zone. Now we didn't get another confirmation, and it's kind of sloppy, but that's okay. What are we broadcasting here? Another oversold signal. So bullish HSI against a bearish zone. That I distinctly said last time, that's what we want to continue to see. We want to see bearish zones have small reactions like that, like this, and then resume back up. We'll need you'll need two green bars, two green candles before that can send it back up. But all right, and another situation where even on the 4-hour time frame, again, easy, really simple strategy is go 30 bars. Tell me what's happening in the 30 bars on the 4-hour chart. You had a little reaction, you go back into the zone. Roll back down. Did you get to target 1? Nope. That's fine. And again, I just look for this type of thing. Get oversold on HSI. Amplified down here. Yeah, that's deeply oversold, so that needs a little bit more time. But in terms of price, you're not getting big moves. A pattern like that should do the type 1 reaction within 30 bars. You should be down at 60 already or under 60. Last week you should have been there. You didn't do it. A lot of noise. That's for me. All of this stuff that's going on, I see a lot of chart posts, a lot of people talking that it's the noise is incredible. Noise distortion, crypto, regular markets, it's at a level, I don't know if I've ever seen it before. But that's okay. Requires that we focus even more so on development signals. Total 3. Okay, total 3 is a critical index. You take out Ethereum, you take out Bitcoin, we go to the weekly chart. This is a big deal. Okay, Total 3 is a perfect type 2. It is by definition because there's T1. Okay, we hit there's yellow dot confirmation. We held the hop firmly, went right to target 1. That's the reaction by definition, and then came all the way down in kind of a compressed move for the retest, the type 2. Have confirmation. I mean, it's all there. What's the only thing that hasn't happened here? You haven't seen the move begin to go to target 2 yet. Why? Well, you had some consolidation down here. These moves take longer. And I also said last time distinctly, let's pierce the trend line. Let's come back down, kiss the top end there, something like that, and then go. So if we're going to do this consolidation zigzag over the next few weeks, don't be surprised. But you are getting ideal behavior against the type 2 with confirmation, okay, where once we can clear it, and I do like what's going on, we're above the 50 on HSI, amplified, that's the one that needs to really get going here. I think across the board, we need to see that. That will only happen with consecutive green candles, green weekly candles. It's only Tuesday. Again, I feel like that what you're looking at is a lot of noise trying to sort itself out against some ideal setups. Take out Bitcoin, take out Ethereum. What's in there? The top, mostly the top 10 or 20 other crypto. I mean, yes, all other crypto, but of significance, the big cap crypto, just not doing the move yet. I mean, things like Solana, obviously, hasn't done a big breakout move, coiling. And I've seen everything from people are saying, oh, that's it. Solana's done. It's going all the way back down to other people saying, nope, Solana's ready to go. We're going to bust out. And I mean, I literally have seen both of those charts. What do we have here? All right. We had a really nice initial move off that weekly. Big thrust up to target 2, 175 has been the obvious resistance going forward. You want to wait for, if you want to see the acceleration, it's going to be above those obvious highs. But on the daily chart, this does satisfy, okay, the type 1, type 2, daily pattern, 1 and 2. There's some confirmation. Haven't broken out of a couple of dots. You know, we're still in this kind of tight consolidation range. And it could also be a lot to do with the fact that we're in an election cycle, that people are not going to put out convincing positions or allocate money with conviction until we get past it. So hence a lot of noise, a lot of consolidation. But what's inside this noise? We've got some clear signals that I think the market will continue to respect, all right, until we get past it. So if that's getting squeezed between 125, 130, and 150, don't be surprised. Couple more. What do you guys want to look at? Greg's asking, will his $100 DCA, dollar cost averaging, and SCI help the total 3 index? No, maybe a little bit. But what's going on there? Like SCI had this beautiful move. Why? It was a type 2 pattern. Right back in August, early September. Beautiful deep crab. There's the one from 26 back down to 25 again. Sorry, 25 to 41. Back down to 24. But there's confirmation. Now, it took you a couple of weeks before you could make the run to target 2, which it did. And I know the weekly there had had a whole bunch of stuff. All right, and that's That's beautiful. I think that's a first on the weekly chart for, and this is, SEI is like a lot of crypto out there. Okay, that's a first thrust breakout. First thrust. Now come back in, do some more consolidation before we get going. Because even with crypto moon cycles, it's not, doesn't all happen in 1, 2, 3 weeks, or even 1, 2 months, 3 months. You know, six months, a year of aggressive action that builds. What was the other one? One that I really like is this ordinal. Okay, that was up at 42. Now I adjusted an entry back up to looking like really like 30, 32. I'll have to see what I updated. But ordinals had this. Weekly oversold, a bullish bat with more consolidation. That's fine. 27.42 is definitely the main number. But this is also a first thrust. Look, draw the trend line down. Trend line down's like that. It's the first time since the peak in early March that has been able to get out of the downtrend. And so come on back. Now target this area. Target this area, 27 to 30, just roughly, to come back, kiss the back end, drop, jump across the creek, if you will, if you like Wyckoff, and give us some confirmation. In terms of confirmation, in that short-term move, we just got overbought. So let it come in. We'll get another one. I said last week, break it down to a 4-hour time frame. Once you're clearing some daily hurdles like that, let's look for some stuff on, say, a 4-hour time frame in that daily, weekly box. You keep on getting closer. And I think if we get that, if we get an October retracement because it's October for whatever reason, please, that's going to be the opportunity. And it's mirroring almost exactly to the week what happened a year ago with a lot of these. Really quick, another kind of T-coin index representing your crappier crypto, or the others index that takes out the top 10. Okay, remember, I've been liking this for a while. I mean, it doesn't look like gangbusters just yet, but you have a lot of the characteristics in this others index where we've maintained a really nice uptrend. I'm impressed with that. Maybe even the monthly. What's that mean? Well, a lot of the secondary coins that are outside of the top 10 are still trending. Now, we could be in this for a while, but we have not been able to break down. You had the 2021 peak. You came all the way down there, but you didn't even flirt with the new lows. I would say you're kind of building a wedge range like this going forward. And that's strong. So within all this noise, let's trigger off of, say, weekly signals. We have some weekly patterns here. Weekly dots, it got oversold. And what started a week or two ago is the first step in the process. And we should see a little retracement of this progress because we cleared out that downtrend. The 10-month downtrend was cleared out, especially by last week. Okay, so we're down. We're retesting last week's range. That's fine. That's fine. We come in further. That's where the opportunity starts to set up in a major way for October. Also, we do have patterns down here. This is the others. And you could treat this as like the barometer for all those crappy coins. Are they really going to find buyers? Yeah, once the index can resolve this consolidation, and that's around the minimum level, the zone is 212 to 168. Now, I'm thinking it's, probably in here under 200, 195. We'll get another oversold signal. and pretty quickly. It wouldn't take more than 2 or 3 down days to have a flush and then rebound. And that is in terms of all this noise. Okay, you're going to get a trigger. You're going to get that to kind of come in, hit the oversold, flush everybody out, and then start this thing for real. It could be anywhere within the next 4 to 6 weeks. So anticipate it, embrace it. Yeah, the alt list. Greg's got an alt list. Take care, Lawrence. The alt list of things like, SEI, AIOZ. We've talked about those last time. Those are perfect T-coin. There you go. T-coin examples. Still valid. AIOZ had a big move. All right. I'm looking that maybe back at 40. It's a perfect T2. Maybe come back and hit that Gartley. But the important thing is, where's the next confirmation going to happen? AIOZ, great move up. Now coming right back. Get another HSI down there. Akash Network. Okay. Thought that was going to get away from me. I want to adjust my entry to more like 260 or 250. Wherever this next daily HSI triggers, we're working our way out of the zone. Okay, and that's got the type 2. It's a type 2 pattern. The weekly's oversold. Coming back, we're above the 50 on HSI. Amplified's not above the 50 on the weekly yet, but we turn up, a strong week, turn back up and get above the 50. That would get it going. I mean, we just barely missed hitting the 50 level there last week. Your other one was Ave or OP. I like OP. We talked about OP last time. And I don't even think we need to go through all of these. But just get the picture here that the progress that was made in September, where is OP? OP is optimism, was first thrust material. First thrust kind of presenting itself as a possibility of finally starting the move. OP back to back, this little bat pattern, we've seen that on a few of them. To send it back down, great. But we've cracked trend lines. We really did the work that we needed to do, and the work that we've been waiting for it to clear out since I would say June or even earlier. It just took till August to get out of there. Mitch Ray in the house. What's up, Mitch? What's going on? Mitch says, sucks we can't say the trend has reversed to bullish yet. I agree with that. I think we saw progress, but that's all we saw. I mean, we're not there yet. I guess it was 2 Sundays ago for Bitcoin, where it was the first time we could say since the beginning of the year that we actually can start looking. And I've been wanting to look since June. Yep. What's up? Who has that one? Chris. What's up, Chris? Yes, XRP. That's another one. Perfect example of something that's just been super disappointing. Sideways, sideways, sideways for a long time. And now, that was 66 or 67. I had tweeted that out that I was looking for this to get a close above 65 cents to really start something. It didn't close above 65 cents. But I'm okay with this. And this another sign of the crypto, this crypto taking more, I think getting caught up with the election. I really think that that's what's holding this stuff back is you don't have conviction because people want to be damn sure about what's about to come. I think XRP will have its day. Will it be in 2024 or 2025? That probably depends on the election. Same with Bitcoin. All the long-term scenarios, and that's why I really think a deep dive on utilizing harmonic projections and measurements to get an idea of what is actually possible would be great before the election. And I'd do it on Bitcoin as well. XRP is still all about the weekly. And that weekly, we've got, you got the bat pattern. Bat pattern. Where was it? Yeah, bat pattern or Gartley. It's a Gartley on Binance. It's a bat on Coinbase or KuCoin. But this is a critical thing for me. Okay, for XRP, and it usually shows up like this before the larger move happens. Both of my indicators, and you can use RSI if you want. You just don't get as many signals. But the fact that we're holding up in these 50 zones, you're holding above the 50, that's a good sign of strength. Same with here. Now, yes, we need to see this thing continue further, but these indicator formations and those readings are designed to express themselves before price. It's not, it's a leading indicator where you need things like that to set up before the price follows through. And again, you go back to, you can go back historic precedent, look at past cycles, and you'll see that very thing, have developed. You go back, there's 2020 on XRP. Even that was not, the same kind of, there were things that moved much more aggressively. But there's the 2020. Go back here, or even getting an oversold reading and getting above the 50 there or there. Keep coming up in the 50. With the big blast coming, what was that? Almost a year later. There's a lot of similarities, not only to last year, but in terms of the setup. But you go back to 2020, 2021, a lot of things that unfolded in that nature are the same way. Kind of a delayed reaction. You get the indicators, you get patterns first, and they have a stretched out consolidation phase, and then you get finally try to set it free, get the big breakouts. And for XRP, that's up at 132 for target 2. One or two more, and I'm going to get out of here. Got to look at Ethereum. Okay, the disappointment of this entire cycle, without a doubt. And Ethereum, on that last little bust that XRP popped and Bitcoin tried to pop, Ethereum hasn't moved. So that's something that I'm interested in watching, because not only that, we're below the 50. Look at Ethereum here, under that 50 level on the weekly, really going back since June, made zero progress. Now, HSI just last week popped above the 50 level, but that's a first step. I'm thinking that, Ethereum needs to print a pattern, okay, or some oversold readings, and we actually on the daily were overbought. So that suggests Ethereum is going to lag, and I think it will. I think the Solana chart looks better than Ethereum. Ethereum has a lot more work to do. It'd be interesting to see if Ethereum gets displaced at some point. Definitely not where you want to see it. If you're long Ethereum, that's going to take time. Meanwhile, one of the T coins that I mentioned, Ethereum Classic, not a lot of people like it. Here's another one where you have all the patterns in the world. Ethereum Classic, this is a really nice chart. Okay, it's a type 2 off the butterfly from 2022. The only thing that needs to happen is, can we get amplified above the 50 level? We were almost there a week ago. Not happening, not yet. So again, delayed reactions, and we will bang these zones. Focus on the XA levels. For Ethereum Classic, that's like 1640, 1630. But beautiful patterns. And at least this isn't, why is this not what I would call a cemetery crypto? Well, we're not back at, $4. If this was a pattern that was forming at $4 instead of 18 or $20 or even 14 with the hop level on the butterfly, I would say, yeah, it's probably just going to grind that floor. But we've held up above, and we've clearly held for a couple of years this 14, 15 level with the main numbers around 18, 19, that use that as an example for other crypto, that other cryptos should look like that. Shouldn't be like, dare I say it, I don't mean to pick on Cardano people. And people are like, why don't I think Cardano is going to go? Because the lack of action. Did I take it off? Where'd it go? Let me just bring this up here. Okay, yeah, Cardano. Right back at all-time lows. 20, the multi-year low is like 25 cents. We flirted with 40 cents. What's there? Yeah, we're just running into another dot. Another bearish dot. I think Cardano eventually comes back and flushes this 28, 27 cent level off of the bat. So again, we got to sort through these and line up the ones that have made progress and continue to hold versus the others that are not doing anything. I'm just not. I'm not going to be as liberal on this cycle, assuming taking shots at every crypto that presents a pattern like I did in 2020. This is a Bitcoin cycle. You need Bitcoin to be moving to get the rest of this garbage to move. No offense to anybody's coin, but that's the case. You need massive Bitcoin allocation to get this market moving. Daniel, he wants to look at Nvidia really quick, and this, I do see the market turning around. That's nice, little rebound. Really quick. Nvidia. What's up there? 117. We had some things at 125, 120. It was a bat pattern. Yeah, but I think it was that bat at 130, but I think there was, last time we looked at this was an extended hours. I think it was here. There it was. Yeah, extended hours. Little bit different. Okay, on the extended hours chart. Deep crab, that was 125 that was our number we were talking about all along. Even ever since all the way down here, I was in that trade like 106. I was looking generally like 110, 108 level. I forget exactly what it was, and the bat was at 100. And then we had this crab last week. I'm not too concerned with it. In fact, if it got back to say 103, 104, 101, it's a gift. I just think you're in a lot of distortion at the moment. Yes, the obvious kind of thing that's presenting right now and showing everyone is, okay, we've got this clear downtrend move. We're a series of lower highs forming this really nice wedge, but the long-term weekly chart, stuff like that, we do have some bullish readings here, high level bullish HSI, that let's do it like that. Okay, this new cycle, and it started, I mean, we know Nvidia has been running hard, especially off that 2022 low, but the accelerated move started a year ago, like exactly a year ago with that dot on the weekly. And this trend line is still intact. So every time we've been hitting that trend line, and right now that trend line moving forward is like 115. We're going to clear out, we're going to clear this wedge. We will bust higher. Again, we're just going to bang through this month with some noise. Upside, downside, I think the best way to handle this, go for a 4-hour chart. break it down on a 4-hour. Do we get some patterns and any signals there on a 4-hour chart within this month? I think that's the easiest way to go. SUI, I already covered that. Can we expect a decent pullback? Neil, I thought we already covered SUI. Yeah, if we do, it's probably an opportunity. Again, what happened last week and the week before were a first thrust, first move, like wake up move, just like Bitcoin. When I said that 2 weeks ago about Bitcoin, that first move, okay, on the weekly chart above HSI, above the 50 line, that was big, but that was a first kind of consideration. What's RNA, Daniel? Isn't that Regeneron? Avidity Bioscience. Don't know that one. Regeneron. I am looking at a lot of biotech, and that probably deserves its own presentation as well. That looks like a strong chart. I don't have anything to offer you on the weekly. The daily, not really either. Yeah, nothing really there. I mean, that's a beautiful one. But I can't really offer you anything on that one. A little bit ago, someone bought 54 million of the November 15 calls. Yeah, again, when you hear news items like that, listen, if you hear stuff like that on any stock or crypto, or so-and-so on X they made $900,000 last month, so get my follow me here on X. There's no way to verify any of that. And my suggestion to everyone is, learn various methodologies. Learn how to measure the market. Okay? Learn for what we do, focusing on M&W patterns. That for me, that made the most sense. It was, I could recognize M and W structures. And then when I differentiated them and realized, okay, yeah, there's a way to categorize these and then understand you've got 4 of the 5 structures and segments coming together, you have a pretty clear idea of where it's supposed to go. And then understanding what's supposed to happen at those completion levels gives you even further insight of how to analyze it. Okay, it's never one point, it's never one level, but we break it down, kind of continuing to break it down. Like, okay, 561 is a starting point. Then I'm going to look in that whole range, and I'm going to look at 30 bars. I'm going to assess what's going on. But again, thinking for yourself, critical analytical thinking skills are essential. But that also requires patience to let it come together. It's really easy to get to one point and say, okay, that's the end all be all. We've got a massive monthly bearish pattern on the market. It's going to crash. Or Bitcoin has broken out. It's going to go straight up. That is those kind of things, especially with the level of news and narrative being thrown out there, can easily throw anybody off. It's important to look at the collection of trading points, larger zones, and look for specific action items within those areas. Again, I think going back, doing a historic review, maybe next Thursday, I want to really think about this, because we can replay stuff that happened in like 2008. Look at what was developing, and a lot of people saying, okay, like I've been referencing in the beginning of today's session, that just because the Fed started cutting rates does not mean the market's going to go straight down. And you can go back and see how it developed. It developed differently depending on what era it was, what decade it was. It was early 2000s were different than 2008. And it involved usually several months of action that was fairly clear before the larger breakdown and result unfolded. And again, a lot of the narrative that's being thrown out there is trying to feed on your fear. Okay, look at the chart, look at the levels. Tell me what's going on in those windows. And then think for yourself aside from all of that other stuff. All right? Yes. That's what I have for today. Folks, get over to Harmonic Trader. Look, all the free material is there. As a basic member, sign up or simply get the software, send your TradingView username to hpc@sr-analyst.com. All right, and we'll kick you out an email with other resources. Get over on the Discord. I'm expanding those offerings because I just, in a lot of the conversation, this is my final point, okay? People, especially new folks, are easily getting deterred because there's so much garbage out there. What we do here and what my purpose is to kind of impart a framework so that you can think for yourself. Okay, it takes a little bit of time to learn it. Use the software tool, study the free resources, take the free trial, give yourself a few weeks, and then you're ready to upgrade, then subscribe. But what you're going to find is that, hey, okay, I have an understandable framework, a way to look at price action in the market to understand all the stuff that I'm hearing online, TV, whatever. Is that really what's going on? Or what are the charts saying? What's the framework saying? That's where I want everyone to be able to come back to your own thought process, decision-making skills. Using the framework, learning what this is all about for you to decide for yourself. And there is a lot of craziness going on in the world. If the market's going to react off of that, it will exhibit price action and other readings that truly underscore that possibility. We're not there yet, okay? But we've got a lot of work to do, and we'll get through this month. Listen, come on back on Thursday, okay? You have any questions, reach out to me at Harmonic Trader. Those other symbols, Daniel, bring them back on Thursday, okay? We'll look at that. I'll take a lot of requests on Thursday, and we'll get through a bunch of this stuff. Until then, as always, have a great week, and go get them. We'll see you Thursday.